Hi everyone, today is the 12th of February 2021 and today is a Chinese New Year in our country. So I wish everyone a very happy Chinese New Year. And today I'm going to do some rolling of the trade because there's some trade that is going to expire today. And today is the 12th of February and on the 15th of February next Monday is actually a stock market holiday, Washington birthday. So if I don't roll or sell any option today, then when the market open on the 16th, then I may not be able to sell any option for the next Friday expiry. Then I may have to go another week out because usually I try to sell the option on the Friday or Monday. So selling on the Tuesday, the premium will get lesser for that week. So anyway, I will do some rolling of the trade today, and today will be a short video because we are still in our Chinese New Year. So I have Apple that is going to expire today, but this option 136 put is most likely going to be assigned to me, the stock. So I'll just leave Apple alone, and then if I'm assigned the stock, then next Monday or next Tuesday, I will just sell a covered call on Apple and continue with the trade. And Apple is currently, I'm having a loss of about $40 for this option, but that's fine. And then I have AMD trade that is expiring today. I wanted to get in on the AMD, so I sell a pretty close at the money put on Monday. That is the 8th of February, just a few days ago. And the market has moved up. So this option is likely going to expire worthless. If I leave the option alone and wait for next Tuesday to sell, I'm afraid I may not get a good premium for next Friday option. But if I just go and sell the next Friday option for AMD right now, and if AMD were to drop below 90, then I would be assigned the stock for my today expiry. So what I'm going to do is I'm going to close this option off and sell a new put option for AMD. But before that, let me take a look at the next week option. What is the strike that I can sell and what is the premium? The stock is currently at 92.67. So I wanted to get in on AMD. So I'm going to sell the at the money put option again. So this time around will be about 92 put and see what is the price that I can get. And at the same time, I'm done on the 92 put. At the same time, I have to close off the position that I have, which is the 90 put that is expiring today. I do have a risk if I don't close off this option. Then if the market drop below 90, I will be assigned 100 share for this week option, and then I sell another put option at 92. Then I'll have two positions against me. Unless I'm prepared to hold 200 share of AMD, then I can leave the 90 put option alone. But I'll just close it off for about $5. And that gives me a peace of mind. So at least I only have one position in AMD. So that is how I roll a option. And I'll just update the AMD. So this is the current AMD trade. I sell a 90 put on Monday that expired today, but I close it out for 5 cents. So I wasted $5 to close it out for a peace of mind. So for this AMD, I actually profit $1.60 because I used 5 cents to close it out. And today I'm selling another put to open, which is the 92 put that expire next Friday at 167. And the other stock that I'm going to look at is actually NIO. NIO, I have a put and a call that is expiring today, and NIO is currently at 59. So I'm going to close these two positions and open another put and another call. I already have 100 share at $58. So opening another put and another call. Then I will be doing a double wheel on NIO, which I am already doing a double NIO on the NIO. But I will talk about the double wheel strategy in another video. For today, I will just roll the NIO position, both the put and the call. And let me just take a look at the call option for next week on NIO. And if I were to close the current call position away, I will have to pay 24 cents. So to collect my 1% premium, I will need to look for a 60 cent premium for NIO and plus another 26 cents because it cost me about 26 cents to close this position. So I wanted to collect about 86 cents for closing and rolling the call position. So I will just take a look at the next Friday, and which is the strike that I can sell for about 86 or 87 cents. That will give me the strike of 64. So I will just sell the 64 call option. And I'm done. So as soon as I'm done, I need to close off the call position away. That way, I'm still collecting a 1% premium for NIO on the call side. So I'm done for the rolling of the call. So now let me take a look at the put option for next week for NIO. And to collect a 60 cent, where can I go? That would bring me about 55. And I need to close off the put position. That will cost me about 3 to 4 cents. That's fine. But looking at the put side, I will have to sell at 55. I think I will skip the put side because if I can fetch it at 50 put, then I will probably do a trade on NIO. But 55, I'm not so comfortable to long 200 share, especially another extra share at 55. So if the NIO were to drop in the next couple of days, then I will consider to open another put option lower. That will be my double wheel. But for now, I'm back to a single wheel for NIO. So what I have done is I actually roll the call position to next week at a higher strike. So this is my current NIO position. This put is likely to expire worthless. When I have this put, I'm doing a double wheel. But since I'm not doing another put, then the NIO trade will back to a single wheel. And I've closed out this strike, the 61 call. I sell it this Monday for 57 cents, and now I close it out for 23 cents. I open another call at the 64 strike for 89 cents. Why do I want to do that? It's because If the stock were to pick off from today to 61, then my stock will be called away. So by rolling higher to 64 next week, I get to enjoy the upside move if NIO were to pick off from here to 64 or higher by next Friday. But I lose out a little bit of premium because I used 23 cents to close out. So how I calculate the average price will be, my current average price is 51.33 and I need to add 23 cents because that is what I used to close out for this call option. And then I minus away the 89 cents because I collected another premium for 89 cents by selling the 64 call next week. So that brings my average price now to $50.67 for NIO, and that is looking good. So that is my NIO trade and how I roll the call option to a higher strike. And that gives the NIO trade more room to advance. So that will be my NIO trade. And there's another stock that I have, which is the Fisker FSR. I bought this share on Monday for about $14.85. When I bought this stock, I didn't sell a call option because back then the call option premium wasn't attractive. And now in a few days, the stock has moved up $4. So I currently have a profit of $2,000 on this stock. I still haven't checked what is the news that actually moved this stock. But I'm now considering to sell a call option for Fisker FSR. And looking at the option price, if I were to sell it at the 30 strike, then I will get to sell for maybe 30 cents or 31 cents. And if I do it for 5 contracts, then I get to collect another $150 in my pocket. And if the stock were to advance another $11 to 30 and my stock get called away, then that's fine because I have give the stock some upside to run. So what I'm going to do is to look to sell the 30 strike or maybe the 25, but I'll just try the 30 strike for 5 contracts. I actually wasn't looking really to sell option for this stock, but since the premium has went up, I'll just try to get the premium because I'm a premium seller. So I like to sell premium for the share that I own. So I'm done for selling a call option on Fisker for 22 cents for 5 contracts. That give me about another $100+. What I've done for Fisker is that I sell a 30 call option that expire next Friday. So if Fisker were to run up from now to above 30 on next Friday, my stock would get called away, but I would gain another $10 move for every 100 share that I own. Then I'm fine with it. So let's see how it goes, and I will continue to update my trade as we progress along. And so this is my Fisker trade right now at the moment. On the 8th of February, I long 500 share at 1485. You can actually check back the video that I posted on Fisker on this day. Episode number 18, you can watch this video. I did not sell any call option because back then the call option wasn't attractive. I was just buying the stock and planning to hold it long term until next year or even 2023. But right now the Fisker share has shoot up, so the call option has some premium. So I open up a 30 call option that make it into a covered call, and I sell it for 22 cents, collected 5 contract, which is about $110, and I think this option will expire worthless, and I will see where the market go next week and decide if I want to hold the stock or open another call option. So thank you guys for taking your time to watch the video. I hope you enjoy, and if you want to connect with me, join the Facebook group. And if you like the video, please subscribe to the channel to get more update and share the video. Thank you.